Good morning, ladies and gentlemen. A very warm welcome to you on Market Today at Business Today Television. I'm your host, Shail Bhatnagar, and we are going to take a dipstick survey in the market as to how the temperature is on Dalal Street. What are people thinking ahead of the imposition of potential tariffs on the Indian economy by the US, and how is the general state of play in markets? We are joined by Mr. Devin Choksi, MD at DR Choksi FinServe Private Limited, a very dear friend and a watcher of about 4 decades as far as markets are concerned. Namaste Devin Bhai, a very warm welcome. The Nifty is fairly okay after yesterday's drubbing, but the big event is tonight when US President Mr. Trump will announce tariffs across the board for many countries that transact with the US. How do you feel about sentiment on the Lal Street at this moment?
Yes, Shai, good morning. Well, I think markets have a business to react, and that's what it is best. I think when it does it, good or bad, I think it does react. In my viewpoint, I think the tariff mechanism which is currently being employed, that in itself, I think is going to have a lot of challenges for everybody, including for America. And it's not going to be easy for any country, for that matter, to suo moto implement any kind of tariff, even if they wish to. So from that perspective, I think I'm comfortable with the understanding that I think nothing is going to fall on earth as far as I think this tariff is concerned. These tariffs will also play out. Most of the companies, most of the industries, and most of the countries too, I think will have their own adjustment period. Except the fact that I think couple of quarters might go in building those adjustments. I don't think that is going to create any kind of problem or havoc per se. On the other side, if you ask me, I think what America is doing is fundamentally very, very strong move. In fact, I think with this particular mechanism that they are talking about and bringing the manufacturing back to America, probably I think the entire world is going to get benefited out of it. Because the kind of technology that they are wanting to employ in building or bringing back the entire manufacturing is something to look at, I think, as against the noise of the tariff. They are talking about creating dark factories. They are talking about using significant amount of renewable energies in their production. They are talking about, I think, building the state-of-the-art production facilities in the country which America is best known for. So, in my viewpoint, I think this is going to be a game-changing experience that most of the countries would have. China does have this particular ability to create some of the game-changing experiences in manufacturing. It's now turn of America, which is basically the leader in the entire space. So, in my viewpoint, I think we are going to see some very positive outcome of this tariff mechanism that they are implementing. Maybe a couple of quarters will be adjustment period, as I said, for most of the countries. But that's not going to affect, I think, the businesses and the industry beyond the point.
Right. Devin Bhai, that's a very unusual and dare I say positive take on the current tariff war that we are facing, and kudos to you having a alternative opinion which is completely at odds with the general view in the market. Now let us just analyze the short-term impact of this particular process. Fact is that goods are going to get costlier in the US, and similarly, when globally countries react or put in additional tariffs on US imports, it's going to make life difficult for US producers as well. What are the chances that you think US will hit a recession over the next 6 to 12 months, and how is it going to impact India, specifically the IT space, and any other thing that might be impacted positively or negatively in India?
So I'm not an expert on how the recession will play out, but the fact remains that I think they are one of the smartest people on the earth when it comes to dealing with their own problems. We never thought that I think during the COVID times they'll keep printing the currency, which they did, of about $15 trillion. Whatever the consequences happened thereafter, but at least they made ensure that their country did not slip into the recession. And the similar experience is, I think, fresh. Maybe, of course, I think this is going to be play out in this kind of situation also. They do very well understand that the cost of production in their own country will increase if they impose this kind of tariff. And trust me, I guess they have the alternate mechanism ready, for which I think they are making this kind of a bold move. An alternate mechanism, which I see is a reality today, is I think bringing down the cost of production, which America desperately needs to do if they want to enter the manufacturing. And for bringing down the cost of production, I think in the near term, nothing will happen. Maybe I think over a longer period of time, they will probably be able to implement it in form of power cost reduction, in form of, I think, manufacturing cost reduction, and make sure that I think the input cost in the country remains fair more into competitive level across the globe as far as their manufacturing is concerned. So in my viewpoint, I think that things are likely to play out well. Maybe as you rightly observed, in near future you may have some amount of I think challenges, which I am sure I think the country as a whole is going to work on it. And maybe India as a country will relatively remain more safe as far as the direct impact is concerned. Because even if we have to bring down the tariff to zero level on American goods, their production cost is so high that I think the rupees at 85 is making it prohibitively costly for Indians to consume American goods. So if corresponding reciprocal tariff is applied over there, and if they knock out those tariffs and make it zero the way India would make it for some of the items, in such case, I think Indian export will flourish, and that is what the big opportunity is. Our export today to America versus I think what it should be in next 5 years be the approach, and that's where probably I think America would probably find India as an ally, as a good partner in this kind of a situation. So I remain relatively more positive on that impact, though in 1 or 2 quarters, I think the subject will not be in our control. But by and large, I think with next 5 years view, we should be remaining largely beneficial to this entire tariff mechanism which is being played out.
Okay. Devin bhai, we've we've interacted after a very long while. I need to understand how have you viewed this correction that the market underwent, especially on the mid cap and large cap space. You are a long term stockholder, and your stock picks are not seasonal or related to whatever is the favorite space of the market at this point of time or at any point of time. How are you viewing this downdraft in equities at the moment?
Well, as I discussed, and as you rightly corrected, I think we are meeting after a long time probably. But since February or so, I have been making a viewpoint very clearly that the market is in the process of making a panic bottom. I believe that the market made a panic bottom when it went below 22,000 Nifty for a while. And thereafter, I think the market had to recover. That is what I think we also talked about. Now, suppose if I correlate this particular talk with my 8 year cycle theory, which we have employed, I believe that I think the panic bottom formation has already happened. Maybe in the near term, the market may want to test again that panic bottom, which it has made in the month of February, I believe. If that does so, then in such situation, I think it will be a confirmation that the market is recovering. And that recovery in the market could be possibly, I think, a smart recovery for next 1.5 year from now. That recovery could lead to to bring back the market to its previous high or maybe a little short of previous high. We are of the view that 24,400, 24,800 is a distinct possibility on the upside. And should one want to say stay protected, then probably 22,400, 22,800 is the protection at the downside level. So it is in this 2000 point range of Nifty that we are expected to see the market playing out in this particular period. Maybe it may be getting played out till June, or maybe it will take up to July or September. One doesn't know that part, but I think this is likely to happen in this financial year. That is what our take would be.
Devin bhai, in your personal portfolio and in the portfolio of institutional and ultra HNI clients at DR Choksi FinServ, what have been the major changes that you have done in terms of booking profit? And in the last 10, 15 days, 1 month or so, what are the fresh stocks that you have added?
So honestly, I think we haven't added new names. We have actually, I think, added few more positions, I think, which were existing positions in our portfolio. Those positions have been in the area of retail credit, Those positions have been in the area of, I think, the corporate banking space, uh, housing finance space. I think that's where probably we have added some more amount of portfolio positions. We have also been adding the portfolio position in engineering R&D businesses, in which we remain distinctly confident about the prospects going forward. We are also confident about the businesses which are catering to the large scale defense, catering to the power sector and power sector utilities, catering to the railway segment of the business in the capital goods play. So we believe that I think it is this area which is likely to play out well in current year with the higher amount of spending happening from the government and factories producing better than what they produced in 24-25 financial year. So frankly, I think we remain confident in this area, and that is where we have added or accumulated more stocks in our portfolio. We haven't added new names per se during this particular period.
Okay. Uh, in the next week, Devin Bhai, we have the RBI credit policy meeting. The new governor has come with a fresh breeze when it comes to easing liquidity, much needed liquidity in the sector, and a rate cut has also been announced. What are your hopes from the RBI against the backdrop of this tariff war which is about to rage across the world, and the fact that we still have very tepid demand for credit within the country? What are you expecting the RBI to do?
In fact, a very important point and a very important, I think, the decision which is expected to come from RBI in the coming meeting. Largely the fact that I think on one side the inflationary pressure is coming down. In fact, I think in each of the areas where the inflation was getting or was happening or generated in the global space, I think these areas are coming under control. Crude oil price is under control. Peace among the war fighting nation, I think, is something which is being announced. So I think inflationary pressure is likely to come down over there too. Commodity prices, crude oil prices are the main influential factor for industrial inflation. If they do remain under control, which I'm sure RBI is keeping a constant eye on that aspect, and because of that, higher amount of consumption is reality because the cost will come down. Again, I think the RBI will be very, very comfortable if the consumption increases because I think it would lead to a higher amount of collection of tax for the government. In turn, I think the balance sheet of the country becomes, I think, more powerful, and that is what even the regulator would look at. So, from a perspective of, I think, looking at all the equations will lead to inflation, RBI probably was never in a situation of, I think, having this kind of comfort, which today probably they would have. In such situation, in my viewpoint, I think the rate of interest will have to be brought down, and the liquidity in the system will have to be increased because the country as a whole is having a 50 lakh crore budget to spend in this financial year. And if this particular budget is required to be met, then certainly the central banker will have to ensure two things. One, the liquidity into the system. Second, the cost of fund, which will have to be competitive. Should that happen, then India is a darling place for attracting good amount of investment, also from the global investors. Given the kind of play that we are seeing globally, I guess I think we should be in a better position. So definitely having a good hope from RBI this time around to maybe continue to bring down the rate of interest and continue to infuse more amount of liquidity into the system.
Okay. Uh, Devan bhai, a related question on the NBFC and the private banking space, particularly NBFC and in particular Bajaj Finance. You have been one of the biggest and the most consistent advocates of holding Bajaj Finance in the long term portfolio. And now the stock is at a record high after 3-4 years of being flat. How do you watch Bajaj Finance at this moment? What are the positives? And is it adequately valued for a nice run up ahead? How do you see the stock?
So with a 3,50,000 crore AUM book and growing at a steady pace of around 22 to 25% on a CAGR basis, you have a reasonably high amount of confidence that I think this particular company is growing the liability franchising along with a very systematic risk management process in place. So on one side, I think they had the gradual exit of Bajaj Auto's financing business from the portfolio. On the other side, I think they kept on building the different other franchises of lending, including electric vehicles and the batteries that they are talking about. So frankly, I think today even the batteries business per se for electric vehicle, the storage requirement that they have, I think it could be somewhere around 15,000 crore worth of AUM book in their balance sheet. So in my viewpoint, I think this company is moving with a good amount of calibration on the expansion of the AUM. They don't lean significantly on one particular area. They continuously expand the book with a balanced approach, and that's what I like about this company. Very, very prudent, very, very judicial about I think expanding the credit size of the business. They continue to grow well with 25% kind of a CAGR rate of growth, which in my viewpoint I think is fundamental. They are not taking exceptionally high risk. At the same time, I think they are giving predictive upside as far as I think the revenue and the profits concerned. In a falling interest rate scenario, it is better for this company now because I think the NIM would be protected and at the same time growth will be achieved. So we see this as a good business continuing from perspective of next 2 to 3 years eventually, wherein they could possibly become a 5 lakh crore AUM book by in next 2 years time or 2.5 years time.
Okay. And Devin bhai, your two favorite stocks, they have been Reliance over decades, and till recently Jio Finance as well. Again, disappointments galore. Reliance hasn't done anything at all for the last so many months, and has fallen substantially from its all-time highs. In fact, it's at fresh 52-week lows. How do you look at valuations in these two spaces? Jio is somewhere close to its original listing price, or how should I say, demerger price some 3 years ago. Where do you see these two stocks 1 year from now?
Again, I think a very pertinent point. In case of Reliance, we have seen historically over last so many years, whenever the company enters into a capex mode, for next 3 4 years, I think the stock would move in a range. It will not, I think, cross above the range, which is what it has done this time around. When the company announced 75,000 crore worth of investment in renewable space, after having completed the capex program in Geo platform and the retail, they announced the program for renewable, and it is was expected that I think the company would probably till the time they complete in the renewable space the capex program, the stock price would move in the range. But moment the another typical peculiar aspect of Reliance is that I think whenever they have completed the capex program in a particular vertical, thereafter, whatever it has not done in last 3 years, it would go in the fourth and fifth year easily as far as the stock price is concerned. It happened when they started the Geo platform. It happened when they started the Reliance retail platform as well. And I will not have much surprise when we see and hear good news about the renewable segment of the business, which is making a completely integrated play as far as I think the production of energy from from renewable sources and employing those energy into the advanced applications, including their own captive refinery, etc. So, in my viewpoint, I think the renewable is due for announcement as far as I think their entire vertical integration and the horizontal integration is concerned. Should that happen, the stock price will react favorably in that kind of a situation, largely because of the fact that I think capex program gets over and the profitability potent comes in. Also, in this financial year, you are expected to have Geo platform and Reliance Retail becoming a separate listed companies, and that is a value addition that will come into it. So certainly, I think there is a prospect going forward as far as the stock price is concerned. As far as GeoFin is concerned, there are four verticals. Each of them are now operating in a slow and gradual manner. Their entire B2B financing business in NBFC has started operating, and that's what is I think more important because I think they have captive customer base in form of their even Kirana merchants also, apart from their own store merchant on B2C basis. They have the BlackRock tie-up with the wealth management segment of business and AMC segment of business. And I think some announcement should be expected on the insurance segment side as well now, particularly after Bajaj has separated from the alliance. I think some expectations are also on that ground. So GeoFin remains, I think, a very formidable kind of a proposition out here because on one side they have customers, on the other side they have 1 lakh 40 50,000 crores of balance sheet net worth. available. And on the backend side, they have got the complete technology framework in form of Jio to cater to different verticals, including I think to the B2B and B2B2C kind of a vertical. So we are relatively more confident about the growth prospects going forward because all equations are already in place. Maybe we are waiting for commercial announcements to happen on various aspects of the business. That's where probably I think you are going to see the traction happening in the business.
Okay. And my final question to you, Devin Bhai, any advice, hope that you would like to hand out to people who've entered the markets in the last 1-2 years and have seen a very, very serious erosion in their capital? Any learnings that you would want to share from your own experience in 2008, 2009, before that in the dot-com bust, and of course in the 1996 bear market?
If you are holding the quality stock in the portfolio, then probably I think you have a reasonably good expectation to recover the cost I think which you have invested in last 1.5-2 years at a higher level. But that is a subject matter of consultation with some expert, I think, in your portfolio as far as you as an investor is concerned. You need to, I think, consult some right kind of people to basically find out whether I think the quality of investment does merit, I think, hold period or does I think merit switch period. So that kind of a activity, I think, will have to be carried out by the investor, I think, in consultation with their investment consultant, as I see it. But if you ask me, I think save and accept those mid-cap, small-cap companies which have been, I think, quoting at a higher valuation, which investors bought in during the momentum. I think accept that part of it. I guess I think the long-term investment in some of the large-cap companies, they remain absolutely convincing to me at this point of time. And in fact, I think I would think that this is a buy opportunity for some of the good quality stocks, which are French stocks, which are available at a compelling valuations today in the market.
Yes. With that, Devin Bhai, sadly, time draws to a close. But as usual, it's such a wonderful experience listening to your calm views, and of course, such wonderful wisdom and intellect. Thank you for your time, and have a nice day.
You too. Thank you so much.
Thank you. That was Mr. Devin Choksi, Managing Director at DR Finserv Private Limited. This is an institutional brokerage dealing with the ultra HNIs, and of course has 4-5 decades of experience in the Indian markets. I hope you enjoyed the conversation as much as I did. I'll be back at 2 p.m. with much more. Thank you for watching. Stay glued to Business Today Television. There's a lot that's happening on the other side of the break.
The new education policy debate is heating up. Former Congress President Sonia Gandhi has launched a scathing attack on the BJP-led central government, claiming that 3 C's of centralization